I think, talk you through that, and we will open up then the floor for questions. Just in terms of the overall highlights on the transaction, uh, the total size of the transaction is around fresh issue of 4,500 crores and OFS of 6,828 crores. And therefore, I think at 11,330 crores, this will be making Swiggy the second largest IPO that will be bringing to the market in India. I think with that, let me actually request the management team to start with the presentation, and then we'll take it up for questions. Thank you.
Hi, everyone. Thank you for joining us all today to talk about the Swiggy story. Over the next few minutes, we hope to cover some ground on everything about maybe how the company started, what is its snapshot today, and our strategies going forward. So let's go into the presentation now. I think in the beginning, I just want to talk about Swiggy overall, right? Our mission statement is all about unparalleled convenience for urban consumers. And that means that we are in multiple exciting categories serving, the top part of India's consumer pyramid by affluence. So we are today in like the food delivery, the dining out and events, and grocery and household items category, apart from other hyperlocal services. And we do this by having a vibrant ecosystem of restaurant partners, merchant partners, brand partners, and delivery partners. That is, the foundation for the Swiggy platform as we went today. I think if you look at the markets that we operate in as well, I think we're very, very excited about the underlying rails. Whether you look at, maybe we can start with, let's say, the online food delivery market itself. As you can see, in the chart on the left, I think the overall food services market itself is going to grow at a fairly healthy clip. And, it's the beginning of the food delivery or the restaurant ecosystem in India itself, if you look at it over a longer time frame. Which means that I think we're really, really early compared to any other country in the world with respect to this discretionary income expansion and therefore participation of the restaurant industry in that. So I think the excitement for us is the underlying rails itself for what we do are going at a very, very healthy pace. As for, let's say, the quick commerce business, I think the underlying is already an incredibly large business, which means that we can together as category players go after a very, very wide TAM of close to 30 to 50 billion US dollars by 2028. And that's the size of the market that we're playing in. I think if you look at each of the categories, some are already meaningfully large, but are going to enjoy like super nice secular growth in the underlying over the next 1-2 decades. And some are already in incredibly large, markets. And the coming together of this, serving like a wide consumer base, has us all very excited about the next 1-2 decades. I think also want to talk about that, just a snapshot of the Swiggy app and the many service offerings that we have on the app. I think one of the things that we've always been excited about Swiggy is the tinkering, wandering, innovation-led culture. I think we've taken many contrarian views in the past, and we've been happy to get on the right side of it enough times. I think even when we started in food delivery in 2014, we were the last player to emerge in the ecosystem. There were already 7-8 players, even if you look at 2015. We took the choice of wanting to control the delivery experience and the fleet ourselves. And that was, let's say, an insight that broke open the market at the time. And the same with, let's say, quick commerce or Instamart at a time when many players had already piloted short-time grocery delivery, but those models didn't work. Luckily, we were able to iterate and invent on like the operating model to find Instamart, let's say, as the first version of quick commerce as we know it today. So I think we're all offering all our services on the same app. The Swiggy, the brand stands for unparalleled convenience, and we offer food delivery, Instamart, Dine Out, all of these service lines on the same app. And to make the experience even better, we have a membership program, Swiggy One, that gives our consumers benefits across all of our business lines. In addition, we also have some exciting partnership with HDFC Bank to offer a co-branded credit card, which you can again use to get more and more value across the service lines that are available on Swiggy. I think this strategy of a unique, unified app unlocks synergies across multiple things. There are users whom we have acquired over time in the food delivery business who show a propensity towards trying out, let's say, the quick commerce business in these geographies. And now that's starting to also happen vice versa as, let's say, the Instamart or the quick commerce category expands. And this has played out in multiple countries in the world. And this is probably just a slide to show peers globally. And I'll just pass it on to Rahul.
Yeah, sure. So this particular chart here shows the cohorts of how they have performed over the years. So the first chart on the left shows our GOV retention by cohort. So year 2019, the users who first came and spent, say, 100 rupees on us, in year 6, they are spending 283 rupees. This is probably true for many of, say, our households, where we have increased the number of services that we have used on Swiggy, as well as increased our overall consumption and spending on the platform. Similarly, if you look at the frequency retention, users that were acquired in 2019, they are having 1.7 times higher frequency compared to when they first joined us. Even if you look at the latest year, FY23, users who spent 100 rupees in the first year are spending 205 rupees. So the pace of spending has accelerated for the latest set of users because we have added the number of service lines, more recently the quick commerce and dining out segment. And this trend is also visible in the frequency side of things. The other benefit is that the number of users who are using more than one service, over the last 24 months, we have seen this doubling to 27% of our user base who are now using not just one service, but multiple services on our platform. The other thing is around really being able to cross-pollinate. So while initially Instamart used to get a lot of users only from the food delivery network, the reverse is also starting to happen. So 1 out of 4 users on Instamart platform today come with the Instamart being the first use case, and half of them are now being funneled back to the food delivery platform. So the flywheel and the reverse flywheel for some of these categories is starting to demonstrate basis user behaviors on our platform. And this will amplify as we not only increase the number of service lines, but also the geographical coverage. When we launch a new city in, say, Instamart, it is not that we are starting with ground zero. We already have a set of users who have either used the food delivery service or the dine out service and get access to the quick commerce service on day one of the launch. So this will continue to give us compounding benefits as we launch more service lines as well as more geographies over time. So we've also been the most valuable brand in consumer technology and services platforms in India. So this was a Kantar survey which we have referred to in our filings. The other thing is that the overall network expansion that has happened across delivery partners, restaurant partners, the active growth in dark stores. There's a lot of numbers on this slide. We will, you would get this as handouts as also as part of our RHP filing. In terms of our growth over the last 3 years, FY22 to 24, overall B2C GOV has grown by 32% at the platform level, with food growing at 16%, quick commerce at 122%, and dine out growing by 98%. Right, so these are pretty strong, growth numbers that we have been able to demonstrate, and increasing the frequency number of transacting users has also continued to increase across our service lines. Coming to the margin side of things, on the B2C GOV side, we have seen continued expansion on the margins, not only on the contribution margin side, but also on the adjusted EBITDA side. This is a combination of all the businesses. And as we go down specifically business by business, you will see that getting reflected. So this is on the food delivery business. So as you can see, our GOV or our take rates have continued to improve, at around 25.4% as of the latest quarter. Our consistent growth in the user base, currently at 14 million users, as of June quarter. High consumer engagement in terms of frequency continues to remain strong. Our contribution margin has continued to expand pretty significantly. We delivered 6.4% contribution margin in quarter one. And with that increase in not only GOV but also contribution margin, our adjusted EBITDA as a percentage of GOV in the latest quarter that we have reported our results of quarter one, which is quarter ending June, we delivered a 0.8% positive EBITDA. On the quick commerce side, again, a few of the strategic, thrusts that we have, started in the last, say, 12 to 18 months. One was the absolute size of the stores. So we have expanded, our average size of the store has moved up from the 2,800 square feet zip code to now more closer to 3,800 to 4,000 square feet zip code. So we've expanded the size of the store. This has helped us in increasing the number of SKUs available on the platform. So from roughly 8,800 SKUs to 19,200 SKUs over the last 12 months. Our densification of the network has meant that our speed have significantly reduced. And as consumers, we may all have experienced it while using the Swiggy, Instamart franchise. Our average delivery time has come down from 17 minutes to close to 12.5 minutes, again in the same period. As a result of the increasing size of the store and increasing expansion of the SKUs categories, we have seen our average order basket continue to increase. It grew close to 7.5% or from 440 to 487 rupees over the last 12-month period. In terms of now moving to the the number of dark stores and profitability, we can see that there's a continuous increase in the monthly transacting users as well as the reduction in the contribution margin. The chart on the right bottom shows that in FY23 we had a negative 23% contribution margin. That was the year of the network expansion for us. So that shrunk to negative 6% in FY24 and a further down to negative 3% in quarter one FY25. So while the contribution margin trajectory has been pretty strong in both the businesses, we have also been able to contain our fixed costs more importantly, which will deliver operating leverage at scale. The top chart is about the food delivery business. If you look at our absolute fixed cost below contribution margin has actually gone down from $51 million a quarter to $45 million a quarter. So while the business itself has expanded significantly. So we do believe that we have reached a place where our fixed cost addition is going to be significantly lower than volume growth that we are going to experience, which is going to deliver operating leverage to our business. Similarly, the quick commerce business, the fixed cost growth has been significantly lesser than our overall GOV expansion.
Yeah, so you see 4-5 of us are already on this chart. I think our team comprises, of course, 3 members. In the co-founder section, we all have various responsibilities. The way we've also recently moved into a structure where we have CEOs of independent business units. Rohit joined us as the CEO of food delivery a few years back. Amitesh joined us as the CEO of Instamart very recently. That's our management team. A lot of the members that you see have stayed with the company for a very, very long period of time. This is also another thing that we made well before actually going for, let's say, the listing process formally. I think a couple of years back, we put together an independent board of directors and have significantly benefited from their advisory on the board since. So it's a mix of financial investors who were with us earlier, along with, let's say, the independent directors who come from various industries who've joined us in the last 2 years.
So yeah, I think the issue summary was articulated by the teams earlier. So now we can get into the Q&A section.
Thank you. We are opening the floor for the Q&A session. We would be taking questions first from the audience who are present here, and after which we would invite questions from our virtual attendees. Request you to please identify your name and media house prior to asking the question. Thank you.
Yeah. Hi, my name is Anil. I'm a senior correspondent at Mint covering personal finance. So couple of weeks back, so the brokers started returning money back to the investors who had applied for pre-IPO Swiggy shares, and stating that some big institution has backed off from the sale trade. Any specific reason for that?
No, so the company has not done any pre-IPO placement. Our last primary raise was in 2022, and the primary issue is what we are currently seeing. What you may be referring to, some secondary transaction that may have happened, which the company is not privy to.
Company is not
Privy to, or party is not a party to.
Sure. Thank you.
Hi, Shrishti here from Money Control. Wanted to ask you this one thing. What is the basis for valuation of the company? Because if we look at the direct competitor, it's around 250 or something. And it has started making profits. But then what kind of modes are you seeing to justify this kind of valuation that it has put out? Thanks.
Okay, so the overall valuation is a subject matter of number of shares times the share price. So just kind of laying the ground there. I think the valuation process itself, the discovery process, has been led by the institutions roadshow that we've recently completed. There's a fair price discovery that has happened, and this is the price band that we have come out to the market with. No, I think we talked about a lot of our strategic modes in the presentation. Our one app strategy, our multiple service lines, our increased user segment, retention, increased user spending. So these are really good signs of overall consumers increasing their engagement and frequency on the platform, which is a moat for us. Yes. I mean, I'll ask Arvind to add on to the valuation.
Yeah, and I think on the valuation, of course, you have to look at a lot of numbers. So I think what Rahul said, one of the key objectives was to price the offering at what the management team and the banks believe is an attractively priced valuation. And if you look at the basis of offer price, and if you compute our ratios relative to the one of the closest listed peers as disclosed in the DRHP, you will find that value, when you combine the qualitative factors, is quite attractively valued. But again, I would point you to the basis of offer price issue, and we can take these questions offline as well. The key objective was to price it attractively so that investors can participate in this journey and make money.
Hello, I'm Mehul Dani from FinTech Business website. What are the current trends of different customer segments who order from your platform?
Hi, Mehul. I think, behavior is, I think we can talk maybe about, let's say, in quick commerce. When we started the category in 2020, 2021, consumer expectations for selection was low. They were surprised to see a battery being available on the platform. Last year, they were surprised to see a bedsheet available on the platform. This year, they're going to find new categories that are going to surprise them. I think what is for us interesting is the expanding imagination of the consumer in wanting more and more stuff delivered through the quick commerce platforms. That is one. And I think another big insight is probably that given it is still largely a similar set of broad user base that is also using quick commerce, I think consumer expectations are changing even in other categories around us. They now want even their food delivery to be faster than it probably was. So, I think I could go on, but maybe if I had to, talk about maybe a couple of insights like that is there. And of course, I think in the food delivery business, we expect continued growth, on like the Gen Z user base. That is going to be a huge growth factor in the next few years. And their behaviors are slightly different from, let's say, the premium millennial users, how they go about like their choice of restaurants, what their markers for evaluation are. All of these are different, but yeah.
Hi, Anurag from ET Now. What are your plans for expanding dark stores?
The expansion for dark stores is a consequence of the growth ambition that we have. And what I want to talk about is from the time you decide to want to have a dark store somewhere, it's a 3-month lead time to actually making it live. So we look at it a lot more closer in time frames instead of maybe projecting 6 quarters out. What we're working backwards from is a growth ambition and aspiration that we have, and make, let's say, the dark stores goal seek for the growth ambition that we have. So we're unfortunately not going to be able to talk about, let's say, the dark store numbers themselves today. We will have more updates on this in our first earnings call whenever we speak.
Hey, hi, Harsha Shivani here from Business Channel. Hi, one more. You have been increasing the platform fee. I think now it is almost 10 rupees now. Do you see that as I don't know, do you see that as a hurdle as you try to get more users, especially from the smaller cities? And do we see it again going up over a period of time?
Shivani, right?
Right.
Yeah. Hi, Shivani. I think if you look at the whole combination of value and price, we always tend to believe that the consumers only are looking for price or value. But frankly, our data shows and our experience shows that there are many consumers who actually are willing to pay for convenience. And it's a global phenomena. Now look at India. Today you book a train ticket, you pay a convenience fee. You book a flight ticket, you pay a convenience fee. You book a cinema ticket, you pay a convenience fee. So honestly, food delivery has lagged most industries in terms of coming to a point where consumers are getting charged a little bit for a platform fee. It's also on the back of a very aggressive loyalty program where a large section of consumers' orders are covered by free delivery, right? Now, the question is it enough? I think we test out. We don't have a fixed view on what point is enough. We test out in terms of what the consumer response is. So which you call XPs or experiments that we do. I don't have a forward-looking guidance on where we see it heading, but also remember that platform fee, unlike popular perception, where on LinkedIn you'll say, "Acha, 1 rupee into this order equal to so much going to bottom line." It also goes to our stakeholders. So, for example, it allows us to pay our delivery partners better. It allows us to conserve a little bit of on what we charge to our restaurant partners. It allows us to do things for consumers in a different way. I think it's a very important tool, and as a maturing consumer tech startup ecosystem, we should not shy away from monetization if it makes sense.
I think overall, from a consumer value standpoint, 2 years back, we almost didn't have a membership program at all. Today, a large percentage of the orders going through the platform are through the membership program, which is attractively priced, giving free delivery. For example, there were no other avenues for free delivery earlier, even for non-members. But today, let's say we have a Pocket Hero offering that allows even non-members access to a few restaurants to free delivery. So it's an overall sense of value that we need to create for consumers, and that's one part of the mix.
Right. One more question is, you have a branded credit card. Now, assuming, you're always looking at newer business avenues, do we see yourself also getting somewhere in the fintech zone, offering anything on the finance part?
No, at this time, we don't have anything that we want to talk about. Like there's nothing to comment in terms of new fintech plans. I think the one that we have live is the membership, the co-brand card itself, and that is the only one.
My question is that is there any percentage which
Can you identify your name and
Yeah, it's Ridhima from Business Today. My question is that what sort of percentage allocation or has it been done for the utilization for the growth of dark stores, as one of the reporters also asked? Is there any percentage in mind that what sort of money from the IPO will be allocated to it? And secondly, how do you think of placing yourselves with the competition you might get from DMart in terms of growth of the consumer base?
Maybe I can take the second answer first. I think ultimately the value proposition is very, very different across various forms of grocery in India. I think we classify all of grocery as one category, but I actually don't think it is. There is a different proposition from, let's say, a DMart, which is it's all centered around value, whereas, let's say, the quick commerce industry is centered fully around convenience. You have to have enough value that it doesn't feel irresponsible, and you're making sure that they're getting good value for money, but it is not centered on value. So I would actually say that the propositions are wildly different. The user base is also slightly different. So as of now, we don't see it as a direct competitor. Though may look like both of us are in the grocery business, the propositions couldn't be more different. Yeah.
Specifically on a question, it's there in our RHP of 1,178 crores, which is earmarked for it. Having said that, we already, have a very strong balance sheet. Our food delivery business has started to generate cash. So you should not see this as a limiting factor in terms of our ability to continue the expansion journey if needs be.
This is Prithvi from VC Circle. I would like to ask, out of the product offerings, product segments that are there right now, which ones do you think is showing most promise and you think you will allocate a lot more resources to? And also, has there been any change in the way that you're looking at as far as expansion is concerned with regards to proceeds that you're going to get?
Maybe I can talk about expansion, and if the question was about categories in Instamart, maybe you can take that after. I think in terms of geographic expansion itself in food delivery, we're already in 650 plus cities, and the room for growth from geographic expansion is lesser than user base and frequency increases of this user base, etc. I think in the quick commerce business, however, we're testing new ground every passing month. So we were already in 30 plus cities and we continue to expand cities, and each city's launch is the feedback that we have to keep acting on for the next city. Each city operates differently. The problems and the pain points that we solve for consumers are slightly different. In the big city, it may be only convenience, but as you go into slightly smaller cities, you start even unlocking selection for these consumers. So there's a lot of iteration that we'll see in the category, but surely it will continue to expand to a few more cities before we then can evaluate the next wave here.
If I may add, I think this is a favorite question. I think we are blessed to be in good categories, right? So if I have to give you an analogy, let's say we have three kids. One is 20 years old, the other is 18. 20 is food delivery, 18 is maybe dine out, and we have a 9-year-old kid, which is Instamart. Now, all three have a long life and great career ahead of them, right? It just happens that at different phases, and a 20-year-old started earning some money to fund pocket money for others. So on a lighter note, I think that's how we feel. We don't feel we are having anybody in the portfolio who is like 50, or that's only me, right? So that's the right way to think about a collection of businesses that we sit on. I think we are just fortunate to be in the portfolio we are and feel very blessed.
Yeah, in terms of the kind of categories or products that we will be having, see the trend that we have seen, and it is true for across a lot of platforms which are very heavy on engagement with the end consumer, is that when they are very highly engaged, they tend to go for that particular platform for any kind of default requirement. Now, there are two kind of, default requirements when very thought through, that you want to do research and do all the things which are associated with it. The other is that I need it. I know what I want to buy, but I essentially, need it fairly recently. What we have seen in Instamart specifically is that the second case is very, very, prominent essentially, and it is not restricted to specific product categories. Even in categories which can be classified as long tail, there has been cases in which customers really want it right now because they want it right now. It could be for gifting purpose or essentially anything like that. So the small answer to all of that is the product categories will keep on increasing. Will be very, very broad based, because what consumers are asking for is more broad based things, for a kind of a shop where they can essentially go and buy everything which they need right now.
I am Dilip Davada from Chittorgarh.com. I have two questions. First is, you have already listed Zomato as your listed peer nearest. So what are your market share as of now and where it will be after 3 years?
No, so market share inter se, I think between us and a peer, I think the numbers are out there. I think it's, you can kind of decipher that. I think where it will be, I think overall the industry growth we talked about, I think that's our focus. That if you're in the very exciting category of food services, which is growing in double digit, as online food delivery, can it grow 2x the pace of growth of online food services itself? So we will continue to grow, hopefully, higher than the industry growth rate.
And as far as Swiggy is concerned, what is your current ratio of turnover, food versus other operations, and where it will be after 3 years?
So I think when we started off quick commerce, as one of the innovations within the portfolio, typically you start with any innovation targeting 10% of the main business, and that's how the start was. As per the latest numbers that we have disclosed of, quick commerce has already reached 40% of our food delivery business. In some cities, it is higher than that, but overall, it's at 40%. And it is growing faster than food delivery, and that's again factually true. So if you kind of draw the trajectory, we do expect sometime in the future that quick commerce will become larger than food delivery.
And you are asset light model business, we can say. So I think you have about 250 crore loans. So where you are using that?
So some of the warehousing expansion that we did for the quick commerce business, it was utilized for that. And one of the proceeds, utilization of proceeds is to be retired that small loan that we have.
Thank you. Wish you all the best.
We will now address the questions that we have received from our virtual attendees. The first question is, how have some of the key metrics of the overall platform evolved in the past 3 years? And how are they expected to grow in the upcoming quarters?
I think key metrics we talked during the early part of the presentation today. Future guidance is something we can't give as of today because we are restricted. We will try to give a lot more color during our quarterly earnings release so that it's publicly available. We will definitely keep sharing more and more as we learn about these exciting categories. I think there are mature categories, there are growth categories. So there's also the journey ahead of us to learn and also share with you transparently of how we are seeing the market evolve, and on a quarterly basis share with all of you.
Thank you. While you have dwelled into Swiggy's journey from the start, how has the past 1 year panned out for your business?
No, so I mean, we saw the numbers there, right? I mean, last 3 years, 32% strong platform growth across our various businesses, food delivery, quick commerce, as well as dining out. So I mean, the questions were specifically how it has panned out. Numbers are something that we've already discussed. Was there anything else specific? If you can ask it again, please.
Just two things to add there, important ones. From the food delivery perspective, what we did last year was gain a substantial chunk of contribution margins improvement. And on the quick commerce side, like we mentioned earlier in the presentation, we were able to improve our consumer proposition by reducing the delivery times very substantially from 17 minutes to 12.5 minutes, as well as increasing the SKUs available on the platform, which has helped us improve our average order values and hence our contribution margins.
The Swiggy brand delivered through a unified app with consistent user experience has been mentioned as one of your strengths. Can you tell us why do you take it as one of your strengths and what is your strategy? Why does it work?
I think why it works is what we've looked at over these few years in terms of the category's existence itself. Ultimately, it comes through a set of data points that you see. Have we been able to, let's say, have our users from food delivery try out, let's say, the Instamart offering with good succession? And we've seen that happen. We see that there is a rub-off effect in frequencies as users become more and more sticky to the platform overall when they try a new service. All of that was shown in, let's say, some of the metrics that Rahul had displayed in the deck earlier. So I think at this point, that is what we lean on as a feedback loop to keep making sure that this strategy is serving us well.
We have seen an increase in the platform frequency. What has been your secret?
I think one of it is, of course, by virtue of offering multiple services on the same app. I just talked about like how the stickiness overall increases, and that is, I think, the biggest reason why there is a frequency increase. Also, as users increase their tenure with the platform and start getting more comfortable, we also see there's a general pattern of frequencies increasing overall. Those two are the reasons why.
What value proposition does the company offer to each stakeholder partner, and how does each one benefit from the system?
I think our consumer proposition is something that we've covered through the day, maybe restaurants and delivery.
Yeah, I think on the food business, restaurants and delivery partners, restaurants want to keep it very simple. I think we provide for a large swathe of restaurant discoverability, because we just enable that, I think, through our ads program, through listings, etc. Second is just operating leverage, because a lot of kitchens don't have more capacity than the restaurants can consume, and that increases their profitability. Third is just in terms of sheer access to consumers, because if you think about it, the tech stack and the consumers acquisition spends is what we have built over the years, and they get access to that almost immediately. So that's the restaurant ecosystem. On the delivery partner side, three things. One is we are probably the only type of platform where, irrespective of your education level, is irrespective of anything except the fact that you should have an Aadhaar and driving license, you can start earning money within 3 to 4 hours. There's practically no platforms which allow that capability. In fact, we are also the shock observers for the economy in some sense, because we have a lot of people who face job loss in other areas, and the one fallback they immediately get is to operate on food delivery till the time they find another job. So there are many benefits there. I do think, as a conceptually on this side, the whole thing needs to be understood very differently from employment, because the people who are coming in are also choosing with their feet not to get permanently employed, but to have flexible employment of some nature, right? So I think it's fascinating. It's a three-sided marketplace, but for each constituency, the number of features and the number of benefits that a platform like us is blessed to provide is probably a amazing part of at least my job. Right?
Next question. Why is MIH India not qualified as a promoter, even though their post OFS stake will be 26%? And the second question by the same journalist is, how much capital has the company raised till date?
Sure. So on the first question, I think, so the process will be below 25% at listing. So including the primary dilution that is happening as part of the IPO, they will be below 25%. And as per current SEBI regulatory guidelines that are available, below 25%, you don't have to file as a promoter. So the total capital that we have raised till date is around $3.2 billion.
Given the Ministry of Finance has come out with a monthly review mentioning the potential slowdown in urban demand, how do you plan to tackle that?
I mean, at this point, we're not seeing that. The businesses have been demonstrating strong growth, all the businesses. We continue to do what we have been doing, serving consumers well, and making sure that demand continues to flow through. We just briefly talked about how exciting each of these categories are in from a demand and growth standpoint, and we see no signs of slowing down there.
And we continue to add consumers, categories, and geographies onto our platform, which ultimately continues to aid our growth. So like Harsha said, we've not really noted this on our platform as much.
Okay, thank you. We have one last question, which has come. As newer categories and products are rapidly launching on Instamart, could you give us some insights about what would be the share of revenue coming from discretionary categories versus essential categories?
Yeah, so, okay, if you look at essential as grocery, obviously the majority of numbers still essentially actually comes from them. But the way I would want to classify is the way I think it has been identified essentially in the question. It's a need of an hour thing. We are seeing an expansion across all categories, and obviously these newer categories which are non-grocery are expanding much faster, and that is leading to a more broad-based inclusion of all these categories in the basket as well. The one trend that we have seen is that yes, some of these categories are more head-heavy. Any head-heavy category is moving faster, but it is essentially broad-based.
Thank you everyone for your questions. We will now call upon Mr. Arvind Vashishta, Managing Director, Head of India ECM, Citigroup Global Markets India Private Limited, to share the closing remarks.
No, thank you to all of you for coming and asking questions, listening to the story. As you all have seen, Swiggy has been, the pioneer of hyper-local, hyper-commerce in India. And this IPO gives a opportunity for investors to participate in the growth which is coming up with a management team which is truly world-class and a business which we believe is very high quality. The management team also believes that the valuation at which the IPO is coming is attractive in its own right, as is will be visible with the anchor participation that you'll all see when the anchor is announced. So we do hope for a strong support from all of you for the IPO. Please do join us for lunch. Thank you very much.
Thank you, sir. Thank you, everyone, for gracing us with your presence. We request your support in making this IPO a success.
Thank you,
For
everyone.
any further queries, please feel free to reach out to the Ad Factors team. And please join us for lunch.